You're a Canadian e-commerce business expanding to US and you want to know if I can receive payments into my Canadian corporation's bank account, if I have to open a US bank account, do I have to sign up with authorities there? Can I avoid doing that? Do I have to pay US taxes? Can I avoid doing that? Are there any risks associated with this? We're going to cover all of this in a lot of detail. Let's get started. Hi, my name is Salman and I run a CPA firm based in Toronto and we deal specifically with US taxes. Having run my own US e-commerce stores from Canada, I think I know a thing or two about US taxes for e-commerce stores running from Canada. So how do you start out from Canada as you're expanding into the US? The good news is that you can do all of this straight from a Canadian corporation. You do not require a US LLC or a US corporation to go into the US market. If you do absolutely need one, I have a separate video on that where I discuss that in a lot of detail, how to do that, how is it beneficial for you, and what requirements are there. First question you probably have is, so how to get paid into your Canadian corporation from the US? All of the major high street banks in Canada have a cross-border banking system. So RBC, CIBC, TD, BMO, but out of them, I would recommend a couple of banks. So I have clients that are using TD, BMO, and CIBC. I would not recommend going with RBC because their banking system isn't the best. And especially if you get something set up ASAP and you want to have the ease of use, RBC has known to have problems. I would definitely go with TD because they have a lot of branches in the United States if you physically want to go there. CIBC I know doesn't, and BMO, I'll be honest, I'm not too sure about. But I have had clients that have been using BMO, they've been very, very happy with it. The other option is to open a US-based account. So for example, Chase Bank or Bank of America, and you can definitely do that, but you'll have to get an EIN, and that just creates more complications. So if you've got all these options, it's pretty easy to do. So why would you want to go through that hassle? But if you do want to do that, I'm talking about that in a different video as well. So how do you open a business bank account? So first you would open your Canadian business bank account. So for your TD or CIBC or BMO. Then you would open a US dollar account or what's called a borderless account in some banks in Canada. So you would have a US dollar account and a Canadian dollar account in Canada. And then the third thing you would do is open a cross-border account with the same bank. So for example, with BMO, it's called BMO Harris. With TD, it's just called TD Cross-Border Banking. And CIBC, it's also CIBC Cross-Border Banking, right? So you're going to open these three accounts: a Canadian business bank account, a US business bank account in Canada, and a US business bank account in the United States. You might also want to open a US dollar credit card to pay your US vendors or whatever expenses you want to have, so that you're not having to pay that from a Canadian card, and you can get all your income in US dollars and pay it in US dollars without having to convert all of that into Canadian dollars. I've had clients come to us who receive money in US dollars, have to convert it into Canadian dollars, then again convert it back into US dollars because they want to pay their US vendors. So if you can avoid that, obviously that's going to be a huge, huge benefit for you. So for my e-commerce stores, I would receive my money in my USA account. Then I would send that over to my borderless account, so my US dollar account in Canada, and now have the funds in Canada, but just in the US dollars. Now with that, I can decide whether I want to pay my US dollar credit card or I want to convert it into Canadian dollars to pay myself. So next step is tax filing. So the US tax authority is called the Internal Revenue Service, or the IRS. And for corporations, they issue something called an EIN, an Employer Identification Number. I would highly suggest that if you do not require one, do not get an EIN, because that opens you to US tax obligations. How do you know you need one? You're going to get asked for it. So either your customer or your supplier or your marketplace, so your Amazon store or your Best Buy or wherever you're selling, they might ask you for an EIN. Or if you're going for a reseller permit, which is basically if somebody's trying to do drop shipping or sort of just buying from a manufacturer and reselling it, they want to avoid sales tax, so they get a reseller permit. For those things, you are definitely going to need an EIN. But if you don't have any of those requirements, I would highly suggest not going for an EIN, not exposing yourself to US tax obligations. Oh yeah, and if you want to open a US bank account, you definitely need an EIN as well. So if you're one of those folks that need an EIN for your Canadian corporation, it's pretty easy. There's a form on the IRS website called SS4. You download that, fill that out. Now, you either have the option to fax it to them, or you can just call them and tell them what you filled out. I would highly suggest going for the call option. The faxing has known to have delays of 4 to 6 weeks. The phone option, you'll get your EIN right on the spot. Most US accountants, if you go to them, they'll tell you to fax it, and that's the only option, but that does not apply for you. Being a foreign corporation, you can call them and get it on the spot, and that's a blessing in disguise. The sooner you can get your EIN, the sooner you can open a US bank account, and you can provide it to your marketplace and to your suppliers and get your reseller permit and get up and running and start making money. The phone number to do that is 267-941-1099. 267-941-1099. So let's get into my favorite topic, tax filing. Before we do that, guys, a small request to you. As you know, not many people are making cross-border videos for YouTube. I'm a very new content creator. I would highly request if you can help me out by sharing, subscribing, liking the video. It would really give me the boost of confidence to keep making these sort of videos for you. So the US and Canada signed a tax treaty back in 1980. And if you can leverage certain clauses and articles from that, you can completely avoid any US tax obligation. I know what you're thinking. How do you do that? Before we get into that, let's talk about a very, very important term, permanent establishment. It's just a fancy way of saying that if you have a US employee, a US office, or a US warehouse, you're known to have a US footprint or a US permanent establishment. If you don't have any of those things, you don't have a US permanent establishment. You want to pay attention to this part, because if you don't have it, you have no US tax obligations. You can completely avoid paying any penny of tax to the IRS. So as an e-commerce store, you probably have a 3PL warehousing, you probably have a virtual address, and you might have a contractor or two working for you. All of these things are fine. A 3PL warehouse is not your dedicated warehouse, so that's not what the IRS is talking about. A virtual address is not your physical office address, so that's also completely fine. Contractors are not your employees. They're not on your payroll, they're invoicing you, so that's also fine. So if you don't have any of these three things, you're in good luck. You don't have to pay any tax to the IRS. I was speaking to a Canadian last week who sells shoes from Canada to the US using a Shopify store, and all of his clients are in the US. He does not sell anything to Canada. And when I told him that he has no US tax obligations, he was thrilled at the fact that he doesn't have to worry about that stuff. Now, if you've gotten an EIN, you still have an obligation to file a tax. The way you do that is using a form called 1120F. 1120 is for corporations, F means foreign corporation. So you file that and you file a treaty-based return, and that's with form 8833. In that form, all you have to do is mention the fact that I'm taking certain exclusions from the US-Canada Tax Treaty, Article 5, which talks about permanent establishments. One important thing here, if somebody told you that you have to file a Form 5472, that's absolutely wrong. In your case, you do not have to. Any foreign corporation that is filing a 1120F with a Form 8833 is doing the exact same thing that a Form 5472 does, and you do not have to file that form. It's important you know that, because misfiling that form or filing it incorrectly or filing even a day late has an automatic penalty from the IRS of $25,000. And I've seen cases where people have been fined that. Moving on to Canadian tax filing, this has to be done in all cases because you're reporting your worldwide sales on your Canadian tax return. For your HST filing, since you're making sales to the US, you would be reporting your sales, but you'd have obviously not collected any HST on that, so you would not be paying anything to CRA for HST. You would obviously still claim your expenses for your motor vehicle, for your fuel, for your meals and entertainment, whatever other expenses, accountant fees and whatnot that you've paid in Canada. Another very, very important thing that most accountants forget is that there's something called a T1134. It's a very, very, very complicated Canadian tax return, and it's where you report having shares in a foreign corporation. If you have any shares in a foreign corporation like a LLC or a C Corp because you're working with a US market, you want to obviously report that on there, and we can talk about that separately. Done correctly, none of these filings will ever open a CRA or an IRS audit because you're doing everything correctly and you're taking all the exclusions allowed in the US-Canada tax treaty. If you have any questions or any confusions, I'd be happy to have a chat with you. This is exactly what we do, and we help clients exactly like yourself.